Welcome to Differentiated Understanding. What do I mean by this? Well, in a world where there is no longer a massive barrier for obtaining information, diverse knowledge and perspectives are no longer rare. What makes an insight or a way of doing things unique is differentiated understanding. Piecing together scattered information, parsing through noise and clouds, and then succinctly coming up with your own understanding of the situation, event, business, or person. That is what is truly valuable. Every episode, we bring in a special guest to talk about their unique take on a critical matter, phenomenon, or business trend. But most importantly, someone who will offer thoughtful thinking. Hi, this is your host, Grace Xiao, and joining me today is Jing Yang, Asia Bureau Chief of Information. Previously, she was a senior correspondent at the Wall Street Journal in Hong Kong, where she covered a range of topics, including Wall Street's foray into China, the globalization of China's most prominent tech companies, and the country's domestic tech regulatory crackdown. Jing, it's so great to have you on, and it was lovely running into you actually recently at Karen's book launch in Hong Kong. We've known each other for a few years now, over like our paths crossing, whether in journalism or when I was working at Alibaba. You've covered Chinese business and tech for over a decade across from S&P, Bloomberg, Wall Street Journal, and now obviously leading the information out here in Asia. So looking back right now, like over the last decade, what's really changed the most in terms of talent, capital, and company building in China, and just your own kind of observations of the whole industry?
Sure. Thank you for having me. Yeah, it was indeed good to run into you at Karen's book talk. So I think the one thing that sort of really struck me is that when I started working as a reporter 10 plus years ago. At that time, if you recall, then China was, rapidly still integrating into sort of the West-led global order. A lot of the Chinese companies and executives and entrepreneurs, I think their mindset was still like there's so much we can learn from the West, from the US, from Europe, from what companies have achieved there. And then now that has changed for various reasons we can get into later, into sort of, this is the way actually, we do things in China. And it has, in so many cases, proved to be actually working better. Or there's more this awareness of, things are different in China, whether it's cultural or, economical or social. And I think then you also have seen sort of equally some examples from Silicon Valley or elsewhere, sort of looking eastward and looking at what are the things that China or Chinese companies have done that we may actually, there are some lessons or experiences we can draw from. I think that is a very interesting sort of shift. It's not just one way anymore, it's more two-way.
For sure. But I think in that sense, still, we have people like Bill Gurley going on his podcast saying like Chinese entrepreneurs or business leaders are just so much more attuned to what's happening in the US compared to vice versa. But there's definitely more and more interest coming from the West to China. I think on that, like one interesting, Chinese tech culture that's really being adopted and, seeing it being embraced by Silicon Valley right now is the 996. That's an interesting phenomenon. What do you think of that? Do you think people are realizing that you got a 996 to really push ahead?
Yeah, that is a very good question. And I think I'd like to actually unpack what we are talking about when we're talking about 996. When it first started in China, and by the way, that wasn't just something adopted by tech companies, but also in general, a lot of big companies in the private sector in China were doing that. And I think what in that sense, from like the mid to late 2010s, when companies were adopting 996, it was mostly like codified to be, remember that was a pre-COVID world, right? You are expected, when you're working, you're expected to show up in the office at your booth or whatever. So that means you have to clock in at 9 a.m., clock out at 9 p.m., right? And then for 6 days a week. But what you actually do in those 12 hours and 6 days a week, is another question. And I think over time, some companies realize there's actually some kind of waste and inefficiency that this codified system has created. For example, a lot of companies, employers, in order to entice employees to work longer hours, they provide dinner and they provide, say, you can expense your cab ride home if you work past 9 p.m., that kind of thing. And over time, then I think that actually did lead to some sort of inefficiency in the sense that maybe some people just want to stay back. If I'm going to go home and I have a takeout myself, then why don't I do it at the office when it's paid for? I'm not saying everybody does that, right? But certainly there are people who did that. And I think while I'm not discounting at all codify 996 has led to burnout and even much worse things. But on the flip side is that when you codify something like that, that is the problem. So then if we look at in the US, for example, right? If you are a Wall Street banker or lawyer or a management consultant, I think you are expected to work long hours when when you are servicing a client who has urgent needs, or you are just on some really tight project deadline, or say if there's a market meltdown. And then nobody would say anything about, oh, that is 996 or not. And then so I think it's easy to like throw the labels around and then not to actually look at what is happening, right? It's not like in the US or anywhere in this world that people just don't work extra hours. That's certainly not true. And in terms of, I read the reports. I think there's a wide article that wrote in depth about this. But the one thing that I think is quite different is that we haven't seen like sort of this being adopted as a policy across board especially by big companies in the US or anywhere else. And in China, when they loosened the 996, what it was loosened was just like you are not expected to clock in and out 9 a.m. and 9 p.m., but you do still expect to work when needed. And I think in a way, the post-COVID world where most workplaces is set up to have employees work, virtually from anywhere, has actually made it worse for people everywhere, right? As long as you still have your laptop or even your phone with you, you are expected, say if your boss messages you at, 10 p.m. with some question, I think it'll be unthinkable to just ignore that, right? And so I think that is actually the real issue then when we say, 996.
Yeah, I think I totally agree with you in many ways that like this whole working from home thing has actually made everyone feel like they're more like glued to their devices and more clocked in. But I think it also just showcases that this whole adoption of so-called 996 in the US right now is really driven by, just the excitement and I guess competition now we're seeing in AI. Because, for big tech for many years, we're used to this kind of story of like, you know, not a very like it's a very cushy job, not that competitive internally. Once you get in, you get all the perks of like the gyms and the free food and everything, and people can just kind of go for walks in the middle of the afternoon, right? Like, and
Yeah.
that culture's completely changed. And I do want to really double click on that on the China US AI arms race per se later on. But before we get into that, I really want to kind of look backwards first, to the start of your career, right? You've been covering China's tech and business space for more than 10 years, essentially. Comparing the earlier BATs, whether it's the Baidu, ByteDance, Alibaba, Tencent ones, to the new companies like the Pinduoduo, Shein, and Temu's, what are the kind of differences in their corporate structures or management styles, or even their so-called Chuhai strategy, like their going global strategy? What are some observations on that front?
Yeah, I think overall, I would say, since you mentioned BAT, I think what the B stands for Baidu or ByteDance, right? But if you look at just the ANT, the Jack Ma and the Pony Ma, I think they represent sort of the last generation of Chinese entrepreneurship. And then moving on to like Zhang Yiming, who's younger, and then obviously Colin Huang as well, and then to like the founders of the hottest AI startups nowadays in China. I think one big shift is that the entrepreneurs, the builders who grew up, who were born like post 1985, post 1990, they grew up in an era when China was like rapidly integrating with the world, and they likely grew up watching a lot of American TV, really engrossing a lot of American culture. And then that sort of and it was also during that time when China was really just thinking like we are the student learning from like the superpowers from the West, the kind of era, right? So they sort of grew up to have like a more global view of like the last generation of founders and entrepreneurs. And then so now this is why the companies that they are trying to build, right, from ByteDance, which is already a giant today, to the smaller startups that we're seeing, they want to compete at a global level from like day one. Whereas in the case of like Tencent or Alibaba or Baidu, what they did was took something that has worked for example, like Amazon or PayPal in the US, and then we replicate that model, adapting it to the Chinese soil, and then we make it work first in China. Then, if that has worked, then let's see if we can export that success somewhere else. I think that's probably the biggest difference.
And I know that beyond the BAT, you covered actually Temu and Shein quite extensively. I feel like these two companies are a bit more mystical to the world because, they feel like in some ways they were the first companies that really succeeded at not being seen as Chinese even when they went global, yet they were caught in the geopolitical rows when the first round of trade wars happened. And, now they're not really making the front of the headlines anymore. So what do you really make of these two companies, like I guess their positioning, how they're doing now, and their like journey to potentially trying to get listed in the West and just frankly failing at it at this point or not being able to?
Yeah, I mean, maybe we'll just separate PDD slash Temu and Shein a little bit because, as you know,
Yeah.
Temu is a subsidiary of PDD, right? So I think Shein is a very interesting company in the sense that it's kind of, I mean, of course, people see them as an e-commerce company, but however, if you look back the roots of the company and the background of their founders, it's not really a tech company in the sense that, they are very good at doing, trade, like international trade, foreign trade in China, right? And then e-commerce is just internet, just a way through which they made their, it was like a marketing and a sales channel for them. But the company didn't start as like say with tech or internet in its genes. It was, for example, in the early years of Shein, they really basically went to like all these like markets in like Guangzhou or somewhere else and then see what we can sell to overseas markets. And then they've sold a bunch of like random things from like teapots to like wedding gowns, and then basically whatever sold that they will sell it.
It was like a glorified drop shipping business essentially, right? Like a bigger scale drop shipping business essentially in
Yeah,
the beginning.
yeah, exactly. So that's how the company got started. But obviously, then fine tuned their business model over the years, and then did, make some true innovations. In terms of how to adopt technology and making fast fashion more not only more efficient but also more trendy, and also through the process it really drove down the cost. But all of that was happening in the against the backdrop of China really has achieved that kind of manufacturing base that enabled this kind of opportunity to arise. And I think that is the part of the Shein's business model that was most misunderstood. And why there was all these allegations of slavery, forced labor, because it's just the cost efficiency was just mind blowing to a lot of people, right? And then obviously what Temu has done is to expand, Xin's business model, replicate that from not just apparel but to many other sectors, right? But essentially, these two company and or as e-commerce platforms per se, they're actually quite different in a sense, because what Shein has been selling apparel is like a pretty non-standardized kind of merchandise, right? Every piece of clothing is different, and then they change so rapidly in terms of what is a market trend. Whereas when you are selling, say, toys or home appliances, these are standard goods that don't really change that much over time. And also the marketing and the shipping and everything is also is quite different. But in terms of like sort of how they were misunderstood, I think the rise of Shein and Temu was really to a large extent misunderstood in the West because what I said earlier about, because those kind of a business models was enabled because of the decades of China being the world's factory, really accumulated the manufacturing capabilities. And when I say manufacturing capability, it doesn't just mean factory, the efficiency of the factory floors, but also everything that goes behind it, the infrastructure, the logistics, etc. And then in the process of that rise, I think in the typical Chinese mindset is like, I don't want to talk about my success or how great I am. I just want to, this very maybe very pure mindset. I just want to make money. I just want to build a successful business, right? I only need to satisfy my customers. Like my customers are the only stakeholder I need to think about, right? They don't think about, oh, there is also, investors or potential investors, regulators, politicians. I used to joke back when, Shein started to, face all this backlash in the US. I used to joke that the people who came out against criticizing Shein in the US are like the parents of their customers. That shows you sort of where the mismatch is.
Yeah, I think it's so interesting that you brought up the stakeholder engagement part up, and it's really funny. I think I remember Shein when they were like they made it to the front page of Bloomberg saying it's like you said being accused for labor malpractice or whatnot. They were just trying to hire so like crazy, frantically hire people who could manage their PR. But it was kind of one of those things where, frankly, it was a bit too late. Like they really didn't have the sense to actually put out their messaging and put out that what like explain what they're doing beforehand. But I actually do want to kind of bring it back to the regulatory side of things. So basically, where are we at right now with the two companies? Like well, I guess and more on the Temu side, Shein side, are they still trying to pursue a IPO in the West, or where are we at right now? And what's really the hurdle? Is it like an international kind of geopolitical hurdle, or do you think it's actually a domestic regulatory?
Right. I think it's sort of a both. I mean, I'm just like, repeating what has been reported out there that Shein now recent confidentially submitted an application to list in Hong Kong. By the way, that is sort of an exception made by the Hong Kong Stock Exchange because usually, like typically, the only times that the Hong Kong listing regulatory regime does not usually allow confidential filing, unlike in the US. And then the times that they would usually grant that exemption is for companies that are already listed elsewhere. You remember all that homecoming listing wave that happened a few years ago, Alibaba and Baidu, etc., that when they were applying to list in Hong Kong, they were all exempted to file confidentially. And then Shein, in that sense, being a company that is not listed elsewhere, that is a sort of a waiver that the Hong Kong Stock Exchange gave them. And then in terms of hurdles, I mean, all of this happened after the DD debacle, right? And after which the CSRC tightened the regulatory framework for Chinese companies seeking to list overseas. And then Shein sort of was caught in, Shein and many other companies' IPO have suffered significant delays because of that. And in Shein's case, because the company is really quite big in terms of the size and also all the attention it has attracted. But if you look at from like say a pure domestic Chinese angle, what Shein is as a company, it really, as I said earlier, in the China domestic angle, Shein is an employer. Shein is a company that is a big customer to a lot of factories in China. That's essentially what it is because it doesn't sell in China.
Exactly.
So then in that sense, Shein is a very big contributor in terms of, the whole economy that it has given rise to, as well as, the tax dollar, the number of employment that either directly and indirectly has contributed. Right. And then that sort of makes it like a case in the regulatory context, a case that has to be really, say, deliberated on. Right. But then, does China want a company like this to list, say, in the US or in London? I think that's why there is the interplay between like the domestic consideration and the geopolitical tensions and also the backlash that came with it.
Yeah, I think that explains it really well. I think for a lot of people outside of China, they don't realize Shein actually is not like a household name at all because like the people, the consumers actually it's not a consumer facing company in that sense in China
Exactly.
at all. It's actually a to-B business per se in China, right? I
It's
think
like
it's
a
perfect.
B2B wholesale company, essentially.
Exactly. I think it's great you brought up the DD situation, and I think that's where I want to kind of bring it back to the last question on the big tech space in China, which is like, we all know there was a domestic regulatory kind of tightening over, between 2020, 2023 per se, DD being kind of at the very top of the epitome of what was happening, and then Baba, Tencent being faced with the R-Xuan situation as well, right? Like the choose one between the two kind of camp situation, the regulatory probes. But after that, basically international investors pulled out of China. People were kind of scared of the China regulatory crackdown. I think people outside of China don't really fully understand why the domestic regulators were, cracking down on these companies. Could you give some context on that? And then I think what I really want to also ask you, the second part of the question is, are we seeing a revival of these companies now with AI being supercharged into their strategies? Recent Baba and Tencent earnings have done really well, all driven by AI, right? Their new AI strategy. Or are they kind of just the last generation staying there back in 2023, they just kind of stalled and stopped there? Are they becoming relevant again? So I think it's two parts of the question.
Yeah, so yeah, let me tackle the first part. Try my best. Even back when I started, this whole thing happened when I was still at the Wall Street Journal, and back then, I think in the beginning, it's being called the China tech crackdown a lot. And I actually made a point when I was writing about it at the journal. I After a while, it has become very clear it's not a tech crackdown. It's not a crackdown on tech companies. Because if you look at sort of the hard tech companies, either it's Huawei or any other that's in that space, they were all fine, right? Essentially, the crackdown was targeted at internet platforms, right? Um, which sort of is equivalent of big tech in Silicon Valley or in the US when we talk about it. But in China, there is actually a differentiation between internet platforms and tech companies, right? So that's the first thing. And then secondly, I think in terms of that regulatory assault, there are legitimate sort of economical and regulatory reasons to do so, right? As you mentioned, the the choose one from two, that was indeed a violation of China's antitrust regulation, where e-commerce merchants were forced to only choose to sell their wares on between Alibaba and JD, for example. So when this whole thing happened, it was indeed sort of the regulatory incentive to do that. It was indeed to rein in um, years of flouting antitrust regulation and other types of regulation. But then obviously the problem that came with it is that the way that the Chinese regulatory framework and the Chinese government in general works is that it doesn't really care about doing a very good job at telegraphing its regulatory intention. That's not just on the tech space, like overall, right? So that's why if you remember the online tutoring crackdown, right? Just essentially what happened was just that was very scarring, by the way, for a lot of investors, right? Because they targeted a sector where the biggest companies are listed in the US, right? So then when you can just do this, issuing a piece of document that just evaporated the entire, sector, that was decimated the entire sector like overnight. That was very scary.
Yeah, it was so sudden. That's what it was. There was no hints or clues. I feel like with the anti-monopoly, there was actually, there was like momentum building up to it.
Yeah. So that really, I think in my recollection, that really crystallized the saying that China is uninvestable. When people say China is uninvestable, they mean Chinese stocks are uninvestable, because that really crystallized how precarious, so to speak, that Chinese policymaking can be. And then, so similar thing with the DD debacle. I mean, I think the biggest problem with that is one can argue on DD's behalf that the company didn't do anything wrong, because what happened was at the time was there really was just no regulation governing Chinese company listing overseas, right? Things were just not formulated. And obviously, Chinese regulators realized that was the problem. So that came up with this new framework that has been in effect since early 2023. However, the absence of a formulated framework did not stop them from punishing companies in the first place for flouting rules that are not explicit. Then that is another piece that sort of shows, oh, okay, this is sort of unpredictable, right? This whole regulatory environment.
And the second part of the question is, do you think we're seeing a comeback? Because essentially now you can't really get into China's private AI sector, right? If you're a foreign investor, and the way they can get some kind of exposure, I guess, is through the US listed companies. Tech companies, in this case, it would be the Alibabas of the world, right? So Are we seeing kind of a shift in interest again, or a revival of these tech giants?
Yeah, I like to answer that question by going a little bit further back first. So, you remember the Shanghai Stock Exchange had when they first came out with the Nasdaq style starboard, right?
Mm-mm.
There was a lot of discussions on what qualified as innovation, so that a company can qualify as being listed uh, on starboard. And you remember Xiaomi actually was gonna become the first company, and then it didn't happen. And I remember having conversation because I was covering IPO and capital markets for the Wall Street Journal at the time. I remember having conversation with some lawyers who consulted with who advised the Shanghai Stock Exchange on designing the rules for Starboard, and there were still a lot of undecided issues, such as, okay, for example, Didi at the time would remain unlisted. Then the conversation was like, Didi as a company, even though it didn't like it wasn't an innovation in terms of the technology of like ride hailing, for example, but it was an innovation in the business model. Then does innovation in business model qualify as true innovation, therefore qualify being listed on Starboard? There was all these questions at the time, and obviously we now know the answer with what happened with the Didi later on. And I'm bringing this up because shortly after the crackdown was on the internet platforms, followed the zero COVID and the whole Chinese economy and many other things related to that just were in a really depressing, slipped into a really depressing state. Then around that time, toward the end of zero COVID, you had ChatGPT, the arrival of ChatGPT that sort of shocked the core of like a lot of tech companies and researchers and investors in China, right? Which we can get into later. But I think what the crackdown on internet platforms made people believe that actually China's paramount leader, Xi Jinping, is probably not a fan of internet platforms. He probably does not think the innovation of type of innovation in business model that I just talked about qualifies as true innovation. Instead, what the things that achieve their companies like Huawei are true innovation, are the real sort of technological advancement that can help bring China forward. So I think that coupled with the arrival of ChatGPT sort of really served as a wake up call, I think, to both the tech incumbents and the startups in China, that we really need to, we are actually behind. We have been, because you remember, like in the mid 2010s, China had these four AI dragons in the computer vision age, and then you have a lot of people sort of proclaiming that China is, ahead of the US now in terms of AI, right? And then obviously that was all that sort of a dream or a recognition or awareness was like just shattered. All things came together sort of between like late 2022 and early 2023, and then that's where we are now. It's hard to tell sort of whether when we see like the BATs nowadays now really doing, some of them doing really good work, and the innovation in AI is driven by the regulatory reason or else. But I would say just the way that things have played out seem to point out to the direction that this really is the era that they have to go to.
Yeah, like to your point, I think there was like an awakening where the focus or the wanted focus was on the so-called hard power competition, right? And
Yes.
like you said, that the kind of slippery slope downward trajectory for the industry was really not just caused by one thing, but it was just the macro situation, the regulatory situation, the companies also not innovating in some people's eyes, were not doing for good for the community somewhat. You remember the common prosperity rolled out, right? All
Oh, yeah.
these things are kind of just adding up together. And then there was the whole COVID zero thing that just really made everything even worse. I think that definitely fed into the fear for international investors and international, I guess, China watchers per se, if you have to put it that way. But I think I want to really now go into the next section of our conversation, which is what you kind of touched on already, which is China and AI, right? And China's AI space and how China is positioning itself right now. I think from the West, especially Western media, it's very, very, very much focused on this idea of an arms race between China and the US. There's a lot of comments about how deep the DeepSeek moment woke Silicon Valley up, made people realize that China was catching up. There's some fear mongering, frankly, I think, but I think some charged by actual fear or confusion or even surprise. How do you kind of make up that? Like, I guess just a high level context first before we go into details.
Yeah, I mean, truly, when we're talking about US-China AI race, we cannot talk about without talking about US-China just competition. Whether it's I think it's people now generally call them this strategic rivalry. That is all happening against this broad backdrop, right? And then the one thing I would sort of note though is that, it's not like there's a lot of companies or builders or funders in China from day one thinking about, I want to like outcompete ChatGPT or, Anthropic with what I'm doing right now. I don't
Yeah,
think
that's the
that's,
point. Yeah, like
yeah,
there's not that strong narrative in China domestically, right? And I think the information because you guys write for such a frankly sophisticated audience and people who are kind of more focused on really the business, I feel like your coverage is not as geopolitically charged. It's actually just talking about what the innovation is, how the capital market is moving. So also I can think from your perspective, like how do we make of this? Is this all noise? Is it just like because of American domestic political reasons that there's this kind of geopolitical narrative? Or do you think there's some sense that in the tech space, in the US, they genuinely see China as a rivalry that they have to hold down versus like we said, like the China tech space actually just they don't talk about that as much. If anything, I think the China tech space actually admires the American tech space quite a lot, like as in they really worship a lot of business leaders, they study their business models, like there's less of a rivalry sense, right?
yeah. So I think in the US, there's a bit of a both of what you just talked about. I'm not expert on America, but what I have observed, at least the China relevant people that I talk to from Silicon Valley to Washington D.C., I do sort of see like a increasing like bridging. I think in the past, Silicon Valley obviously we know is more left leaning, and then DC is different, and then with Trump's presidency, you see all of that, that gap is bridging, and that actually and when I say the gap bridging, the gap is also bridging when it comes to the China discourse. So on one hand, there is definitely fear mongering. Now that fear mongering, I think previously probably mostly concentrated in the DC, and now is like spreading to Silicon Valley. That's what I observed, right? And then also, when I was talking about in China how people were shattered with the advent of ChatGPT in late 2022. Equally, I think in the US, what we see about 12 months later is that with the advent of a DeepSeek R1, a lot of people in the US are like, America is far ahead, is the indisputable global leader in AI, from the ChatGPT moment to then the DeepSeek moment is that, oh, China is so faster catching up. Or in some cases, they even say China is already ahead. And also that in particular is very true with the fear mongering in the semiconductor space as well, because we can't talk about AI without, talking about semi. So I'll just be very quickly talking about here from Jensen Huang to like many other people. I think the last year or so, they have been talking up of Huawei and other homegrown semiconductor companies in China and the capabilities of their chips. But the reality, I'm not saying Huawei is not progressing, but the reality, as our reporting has shown, the information, the reality is that actually the BATs themselves actually do not want to adopt Huawei's Ascend chips for various reasons. First is just the tech is just still not there. NVIDIA is still the gold standard. And then secondly is also because all these companies compete with Huawei in the cloud computing business as well. Like, why do you want to enable a big competitor? But you don't see this being talked about when in the US from Silicon Valley to DC, when people talk about how Huawei is threatening NVIDIA, how US export control policy has forced China to compete and innovate faster, right? So I hope that makes sense, by the way.
Yeah, definitely. I think that's something I wrote about as well. It's just like it's actually people are not realizing from a very selfish business perspective. At the end of the day, these companies are for profit. Like they're public listed companies. Their like goal is to make money. They're not like following government orders to like create something on a national level for the sake of that. So like to your point,
Yeah.
like they don't want to give money and give business to Huawei because essentially one of their biggest competitors, right?
Yeah.
Because like Baba and Tencent, they all have their own cloud business. I think I want to double click on one thing. You said, there was when DeepSeek came out, R1 came out, well, V3 and then R1 back to back, Silicon Valley kind of said, oh, maybe China is ahead in some ways, right? At that point, it was talking about the engineering efficiency, from your reporting, where is China actually ahead, behind, or really differentiated in terms of their whole AI strategy? And this is a broad question. So it could be about the companies particularly, or do you think the whole ecosystem is operating a different way? How do you see that?
I think obviously DeepSeek sort of made it cool, made it the open source and open weight school of thinking cool, right? I think if you remember before DeepSeek became phenomenal, from Baidu to Alibaba to ByteDance, everybody was just doing their own closed source models. If you do open source, you only sort of release smaller or more or inferior models. You only open source those, right? And then what happened with DeepSeek, it just really made in the LLM space, made people realize actually China can be ahead. China can have a real edge if it pushes ahead with open source. And then also when you open source your models, it also just naturally encourages like a broader and wider adoption of your models. It sort of can travel beyond the national borders on its own, right? And if China were to, let's say, if, by the way, as we established, right, it's not like the Chinese companies that are building large language models are or thinking about what the policy or what the government officials are telling us. They really truly are just thinking about like, I want to be better, right? How do I get, if you build a model, obviously you want your model to be used. You want developers to build applications on top of your models, right? You want the cloud providers to include your models as part of their offering. So I think that's what's driven that. And I think the open source thing really sort of shown like, DeepSeek made a lot of people in China realize actually open source is the way for China to pull ahead. And that has happened obviously with Alibaba's Quan. And also I think most recently Zhipu as well as Moonshot came up with their own latest models that also have impressed a lot of AI watchers in the US as well. So I think that is where China is different. And I just want to add one more point as well. There's a lot of money to be made in providing enterprise software solutions. So then naturally, that's when, um, you know, naturally when applications are being built, you want to build for survival. You want to build to be able to become profitable. Naturally, the enterprise software solutions, right? You build a 2B business. But in China, it's completely the opposite. Chinese companies in general just are very stingy in terms of paying for softwares, right? And then so that sort of is the way the ecosystem works, and it has always been like that, right? Enterprise customers just naturally go to the next cheaper solution. So then, entrepreneurs and also venture capitalists who seed these companies know that this is the environment. Then they also know that, if you go down that route, you're just basically, waiting to go out of business. And then so that's also what makes the open source led business model, like have better chances of at working in China, right?
Yeah, definitely. I think the open source versus closed source discussion has been even, rooted out in the software era. And then, like to your point in China, it's really like a market share like business. It's like you commoditize open source models, you try to capture all the market share, right? Like it's very consumer facing right now. A lot of the LLMs, they're all rolling out consumer applications. Versus in the US, to your point, it's you try to make higher margins on a lot of these enterprise products, but you just can't in China. Like the willingness to pay is still so low, and not just China, but I think across Asia in general, like the willingness to pay, or I don't know if it's a cultural thing or it's just like people just don't want to pay. And I was shocked, I think, when I was working for one of the big companies in like a Chinese company for a while, where you would even have like pirated software in their company computers. They're like, oh, we definitely don't need to save on that money, but it's just a mentality. And then there's a lack of like, I must pay for privacy, whatever mentality around it. So culturally, that definitely has shaped the markets quite differently. So I think we touched on, quite a few of the startups as well. Like you mentioned, there's Zhipu, Baitran, Moonshot, Minimax. Do you think there are any companies that are kind of going unnoticed still in the West? Like we named the four that are still called. There was still called like what was the four dragons at one point? Wait, four tigers. I get them mixed up. It's just tigers, dragons.
Six little dragon. This, yeah,
Yeah, they keep on updating them. It's like
yeah,
it's like new versions of dragons and tigers.
yeah.
Are there any LLM companies right now that you think are going kind of under unnoticed? Because DeepSeek in many ways actually was not being they don't have a strong PR. Liang Wenfeng clearly is a very low profile guy. And I don't think people really knew about him outside of China and China's AI ecosystem until V3 came out. So, like, are there any kind of companies that you're eyeing or covering that you think could be the next one, or you think the LLM space is already pretty saturated and incumbents are going to kind of stay as the leaders at this point, or we might use the consolidation?
Yeah, so back when we are talking about the six little dragons or tigers, whatever, DeepSeek was part of it, of the six, but it was probably the least talked about because it's just very different from all the other five, right? All the other five had half venture capital funding, have outside investors. DeepSeek remains fully funded by High Flyer Capital Management till this day. But if we're limiting the scope to just the LLM developers, then I would say that I don't see the possibility of having anyone that we haven't seen out there. As a matter of fact, I'm actually surprised that the consolidation hasn't happened at a bigger scale, with the exception of sort of Alibaba essentially acquiring AI. We haven't simply seen other consolidation happen yet. And I'm actually surprised.
For
If you ask,
context, sorry, listeners, that one's the one that Li Haifu founded. How at
yes,
Tsinghua, yes.
yes. And then now we see that Zhipu has filed to, or is sort of looking at to go IPO in both, Chinese A-share market and Hong Kong. I think whenever they release their prospectus, people will be reading it with a lot of interest. Other than that, I'm just surprised that the so-called Dachang, the tech incumbents in China, have not consolidated. I think there was a time in my, I recall in my reporting, like say in my conversations with sources about 12 months ago, there was a time when some tech incumbents were seriously thinking of acquiring some of the companies we just mentioned. And for one reason or the other, that didn't happen. And all the tech incumbents in China actually decided to build their own as well, right? So this is quite different from Silicon Valley if you look at it, right? We've seen, from Google to the other companies acquiring sort of, pretty sizable startups or not really acquiring, acquire higher. So I do think that the Chinese LLM space doesn't need some consolidation. It's just not sustainable. It needs the level of compute that is needed, and coupled with the chip shortage China finds itself in, it's just not sustainable.
It's such a high capex game here. So like, how do these startups continue to fund themselves, right? And
Yeah,
I want to
exactly.
go into the VC space later, but I mean, end of the day, it's only the Dachang, the big internet companies that have the money to keep on even like chucking into
Yeah,
that machine.
that's exactly what I was trying to get to. Like, it's just not sustainable to have like say 10, 12 ALM developers.
Exactly. I think it's interesting, but a lot of them are financially backed by them, but not at a very big scale at this point. It's like, a couple $100 million here and there, but nothing bigger than that, right?
Yeah, exactly. If I were to, I mean, Alibaba has probably backed the most, right? And obviously, it did it also for the sake of promoting, helping the cloud business, expand its market share as well. But if I were to take a guess, I would say that some of these companies would just have to really like run out of money, and then to the point that existing investors are willing to sell, say, I don't know, 5 cents on the dollar or whatever, so that it becomes financially attractive for any of the tech incumbents to actually acquire them. Otherwise, it's just not gonna, I don't, the tech incumbents, they're all very, the people sitting on top of this company are all very like sophisticated. They're not just going to be, spending like, I don't know, $20 billion, or even not 20 billion, like $10 billion or $5 billion buying a technology that they think maybe they already have on their own, right? Or they can do better on their own. So the only way that it can work is that, things have to just drag along a little bit longer for the pricing and expectation to match. Right now, I think there's a pretty big gap, and also a
Yeah.
lot of the entrepreneurs of the among the six little dragon camp, they also don't want to call it quit yet. I think.
Yeah, I think that people are holding on to their dream, and I think I like people ask me about what I think of the AI startup founders of this generation as well. Like to your point earlier, they grew up differently from the last generation entrepreneurs, and there's less of a I want to make a quick buck kind of mentality. They are really much more mission driven when you like hear about them or their media appearances or what they say out loud, like or even the moonshot guy Yang really just talking about how much of a philosophical pursuit it is for him to chase AGI. Actually, I want to kind of pivot into the VC space. We touched on the fact that China's VC space frankly is not as vibrant right now. Obviously the majority of the money right now, even to back these startups, are from the VATs or like in this situation, like any of the bigger internet companies from the last generation. So how has the regulatory reset since 2021 really reshaped the local domestic VC landscape? Because, we saw that Sequoia was probably one of the first that started the decoupling effort, splitting out their Chinese business called HongShan, which is like a literal translation to Sequoia, the tree. Are we continuing to see this play out, or do you think we've kind of wrapped that up already? It's been a couple of years and like the VC space is getting a bit of a energy back or a recap a little.
Yeah, I'll talk about decoupling first. I mean, I think the US-China venture capital decoupling is already over, right? Like it's already decoupled, and it's decoupled mostly driven by factors out of the US, out of American politics, right? When the Treasury Department in the Biden administration's final month, came up with this long-expected rule that essentially restricted any American investors, be it institutional or individual, to invest in tech and AI related sector in the US, that basically just shows this is over. That piece of regulation is not retroactive. So the money that American LPs have committed to Chinese GPs still remains like okay to invest. But other than that, once the dry powder runs out, the dry powder that's raised before late last when the regulation came, before earlier this year when the regulation came into effect, then that is pretty much over. And a lot of American LPs realize that. And then that's what makes it difficult for Chinese GPs, for Chinese venture capital firms. Because, if you are a American, I don't know, endowment fund, if you are the CIO of an American endowment fund, and then that even though that you remain committed about the opportunities in China, to be honest, DeepSeek only proved that, the most potential lucrative opportunities coming out of China is in the AI and the AI land, which is the very sector that you cannot have any exposure. Then what do you do? So then because of this conundrum, that's what makes it so difficult for Chinese venture capitalists, the GPs, to raise funds from American LPs. Just so you know that American LPs traditionally, I think before the decoupling that started from around 2021, American LPs actually made up for about half. I mean, there's no like sort of consensus statistics on this. I'm giving you a number that was given to me by a lot of people in the industry. Before that, before the decoupling, American LPs make up for like about at least a half for in terms of total capital raised by Chinese VC firms, and then, so that is a big chunk of money that is sort of people know is going to be gone, is gradually dying. So then, to make up for that, we've seen Chinese VC firms going to other parts of Asia, Europe, Middle East to try to, fundraise. And that really hasn't gone that well for various reasons, right? It takes time to build relationships, to understand the culture and the thinking behind all these LPs and all these big institutions that you are trying to basically ask money for. Right? So I think, and then that is sort of on the fundraising part. And on the exit part, for Chinese VCs, the biggest issue right now, the biggest bottleneck, if you ask any Chinese venture capitalist is what is the biggest problem, the difficulties that you are facing tell you it is because it's the difficulty to exit, right? We talked a little bit about the new the new framework guiding overseas IPOs by Chinese companies, and that has created a significant bottleneck on VC exits. And then so when you are managing a fund, right, if you can exit and then return capital to your investors and then show it in your DPI, then obviously it's very hard for you to like show that this is what I've done in and so that you can raise a new fund. And on top of that, we still have like Ant. Let's not forget about Ant. I was recently in a conversation with a pretty with an LP investor in the US who started investing in the China VC space from like the 2000s, so pretty early on, right? He was telling me that almost every big American endowment and pension fund is still remains like locked in Ant, and without that being unlocked, without some kind of exit in Ant, it also really affects the appetite for this for them to continue to invest in the China VC space. So I think we just need to see. I know that in terms of the IPO pipeline that we've seen, for example, late last year, there's a trio of autonomous driving companies being approved to list in the US or Hong Kong, but that's just not enough, right? We still haven't seen like say $1 billion size IPO from like the tech space. We just haven't seen that yet. And I think with the absence of a clear sign of the IPO pipeline being cleared up, without clear sign of a sizable exit, a sizable IPO, a sizable meaning at least $1 billion, it's just going to be very difficult for Chinese GPs.
Yeah, I know you actually cover Ant quite extensively when you're still at the journal. It's probably like your main story for the last year where you had the journal right before we moved over to the information. What are some potential scenarios actually on that point? Like, like you said, this year in Hong Kong, it's supposedly Hong Kong Exchange has hit like the most filings since like pre-COVID, right? But majority are relatively small AI or tech companies. They're not making international headlines. The last one that was really like a major international like eye candy was really Ant. And where are we kind of at with that? I mean, this is a bit off topic, but I just find it so fascinating they brought it up.
Yeah. I mean, just a quick thought on the record amount of filings we see in Hong Kong is basically a lot of smaller companies as well as a lot of companies are already listing in A-share market and doing a H-share listing, right? With the listing of the H-share listings of say TL and SF, it just made it's just something that for the moment that Chinese regulators are more amenable to. But in terms of your end question, I mean, I think what I have come to believe, I mean, I'm willing to be proven wrong because I'm really only just a journalist. But I think if the IPO were to come back one day, it most unlikely come back in its original form, if that makes sense. Like it was supposed to be the world's largest IPO ever, right? They were on the cusp of raising $35 billion, right? I just don't think when Ant finally was going to IPO again, it will come back in that exact shape or form.
Fair enough. I think the company has restructured quite a bit as well, right? Since then. So I want to kind of get a sense. I'm not familiar with the space, but are RMB-denominated VC funds versus what we were just talking about, predominantly being like USD-denominated VC funds in China, are the incentives different for the funds? And do they kind of invest in different kinds of companies, or are they actually fighting for the same deals?
Yeah. So first, the incentives are quite different. It's really like two quite different worlds. Right, different worlds. So in the RMB world, one of the biggest pockets of money comes from government guidance funds and SOE related funds, and then these types of LP they are driven by local GDP growth targets, kind of incentives, and then invariably when they write a check to you, they would require you to bring back some of the investment back to their local like city or province. Say I write you a 10 million yuan check, then that means then usually there's a very detailed percentage requirement written saying that you need to bring back, say for example, 1% of your like portfolio investments, or you need to invest this much in our province or city. And then that is obviously, some can argue, not very like market driven. That is the reality, right? And I will probably also just play a bit of like a devil's advocate. If you are asking for money from like a local government related fund, then obviously, that is sort of the bottom line. That is the profitability, so to speak, that they are thinking about. Other than that part of a difference, the other difference is that it's funny though. So like say, for a while you don't see the RMB world and the USD world sort of overlap. For quite a long time, it was just like coexist, and then they know that they all have their own they all have their own strengths, and then they do quite different types of deals or do different types of go into different types of sectors, right? However, since this USD funding drought that we have just talked about, what you see is that some of the Chinese VC firms that were only raising in USD also have started exploring raising yuan-denominated funds. And then there are mostly two reasons behind that phenomenon. First is, obviously driven by, the dearth of USD funding. Second reason, though, is also because of the geopolitics made it, as we talked about, impossible for a lot of American dollar investor to invest in certain sectors. So that some of the venture capitalists in China realize there are sectors, for example, semiconductor, right? That's just a sector that is just become like not possible for USD funding to get any exposure in. Then if they want to get exposure, if they want to invest in that sector, the only way to do that is through raising a UN denominated fund and invest. So that's
exactly, yeah.
That's why you see the two worlds that previously just coexisting parallel now sort of start to overlap a little bit.
Thank you for the explanation. Actually, that's really helpful for even me to understand. I think I was also noticing this trend. I was like, why are all these former USD denominated funds, like primarily now actually raising RMB funds? But that's your point. It makes sense. The Manus AI agent company was probably the most high profile Chinese AI company that received USD VC money. If anything, the only one, right? This past year. What do you make of that? And, that they moved their operations from Shanghai to Singapore. Where do you see this? Is this like the start of a new opening or like a new way for Chinese companies to go find US investment? Or do you think this is like a one-off thing? Because they did actually receive scrutiny from the US, not so much actually attention from the Chinese side, it doesn't seem like, at least not publicly. So what do you make of that?
Well, Manus is just the latest example, right? But if you remember a company, HeyGen, that also gained some traction right about 2 years ago, I think what we've seen that what all these companies, all these startups represent is this new generation of Chinese founders and builders, right? They born and raised in China, some of them educated in China, some of them a bit of China and elsewhere, but they all grew up with that global vision, global view that they want to compete at a global level. However, it's just so unfortunate that it's not possible anymore for a company to even try to succeed in both China and global ex-China if you are building a consumer-facing product, right? That's just a reality these days. So then realizing that, I think a lot of them now just, if I have to choose China or global ex-China, then some choose the former and some choose the latter. And then for those that have chosen the latter, we've seen exemplified by Manus, by HeyGen, and many others.
I think just one last question, which is, if you look ahead 3 to 5 years, we can't predict the future, but what do you think will be the next big story in the China AI tech space?
Yeah, that is a very difficult question. If I were to try to answer that, I would say just follow. I was in the conversation with someone else the other day. Like what is Chinese startup these days? Like, how do you define that? The definition has to change, and is already starting to change, right? A company like Manus, right? A company like HeyGen, and a company like Genspark. Genspark is slightly different than Manus, right? They actually started incorporated as a company in California, but they are founded by two Chinese entrepreneurs who used to work in China, right? So like I think what is really worth watching is these builders and these entrepreneurs, like Chinese entrepreneurs. They are definitely going to make waves in the AI and tech space globally, not just in China. right?
Yeah, I think we've even seen that shift. Like, remember when Zoom went IPO and everyone
Yeah.
was like freaking out, being like, "Oh my God, it's a Chinese company," but he's like an American Chinese. Well, I think he goes naturalized, and just that kind of mentality completely shifted out, especially in the AI era. Like, more than 50% of AI researchers are essentially of Chinese descent. So how do you then define it, right? That's a really interesting take. I really, really appreciate your time. And I know you said you had a hard cutoff today. So thank you so much, Jing.
Yeah, thank you so much for having me.
If you enjoyed this conversation and found it insightful, please follow and subscribe to Differentiate Understanding on Spotify, YouTube, or wherever you get your podcasts. I'm Grace Zhao, and thank you so much for listening. And I'll be so grateful if you shared an episode with a friend.